Friends, so it's time for us to discuss a new chapter that is called as clubbing of income. So let's understand what all are the clubbing provisions that we have to learn. What do you mean by clubbing generally? See, simply clubbing means, I'll give you one example so that you will get the objective of clubbing. All right, so listen. Say for example, you are my friend. You are my friend and I have a property. All right, so I'll draw the example here. So I have a property. All right, and you are my friend. I'll call you as friend. And I'm JK. You are my friend. So my income is exactly 10 lakhs. My total income from profession is exactly 10 lakhs. Your income is say nil. You don't have any income. So what I did is like, I have an extra house property where I'm getting an income of 5 lakh rupees. So what I did is like, I showed that particular income in your hands. I make you file return for that particular 5 lakh income. You are my friend. That income is with me. I'm disclosing it, but I'm disclosing it in your name. So what is your advantage? Since the total income is only 5 lakhs, you can claim the benefit of rebate. 87A rebate you can claim. And you will say there is tax liability is how much? Nil. But what really happened is this 5 lakh should be accessible in my hands, so that my total income will become 15 lakh. For that 5 lakh, there is 30% rate of tax. So by these kinds of arrangement, what I did is like, I saved that 30% on 5 lakh. Yes or no? I saved 30% on that 5 lakh by showing it in as your income. And I make you claim rebate under 87A. There is no problem for you. There is no problem for me. I can save the 30% on 5 lakh. If these kinds of things are there, department will identify these issues and department will say that this 5 lakh have to be assessed in the name of original owner. This concept is said to be what? Clubbing. Say for example, maybe for reducing tax liability or for taking some unfair advantage, you are showing income in the hands of some other person. Then the department will say that income have to be assessed in your hands. This is the very basic concepts of clubbing. Are you all listening? Now friends, listen. Departments say there are certain situations or circumstances where clubbing provisions are attracted. Now we are about to discuss in which all are the circumstances there is clubbing provision. Alright, so for the time being, only understand that this is just like an anti-avoidance measure. What is anti-avoidance measure? If you try to avoid your income tax by making use of these arrangements, we will bring that particular income in your tax bracket and we will make you pay the taxes. Don't play with us. We know how to, lead the game. Alright, so the point which we are about to discuss is in which all are the scenarios where department apply for clubbing provision. Are you all with me? So we are about to discuss the points where or the situations or scenarios where department invokes clubbing provision. So let's understand where all they come up with this clubbing provision. Starting with point number 1. So we can write a heading, subheading, circumstances where clubbing provisions are attracted. So let's understand which all are the circumstances where clubbing provisions are attracted. So let's understand the first circumstance. That's a pretty simple circumstance. Point number 1, what department say is transfer of income without transfer of asset. You are transferring income without transferring the asset. There will be what? Clubbing provision. That's what the example I've told you. You have simply transferred that 5 lakh in the name of your friend without transferring that house property itself. Then department will say that all the income transferred have to be clubbed back to the or in the hands of original owner. So you are transferring income without transferring the asset. Then there will be what? Clubbing provision. Now let's go with the other provisions. Second point is income arising from revocable transfer of asset. What do you mean by that? Income arising from revocable transfer of asset. Listen, I'll give you one example for understanding what is the revocable transfer of asset. Say for example, JK have a house property and there is his friend. So I told friend that I will not transfer that 5 lakh to your name. Rather, what I'll do is I will transfer that particular house property itself in your name by way of power of attorney, which is revocable. What do you mean by revocable? In future, I can cancel that power of attorney and I can take back the ownership of that particular asset. Are you all with me? Say I have transferred that particular house property under a revocable power of attorney. That simply means in future, if it is required, I can cancel that particular power of attorney and take back the asset. I can take back the asset. In such scenario, department will say all the income, whether I'm revoking it or not, all the income under a revocable transfer of asset have to be clubbed in the hands of original transferor, because the very purpose of transferring the asset is to avoid the income. Yes or no? So the department say all the income from revocable transfer of asset have to be clubbed back in the hands of original owner. So in that scenario also there will be clubbing. So we have discussed two sections, section 60 and 61. What was section 60? Clubbing of income where there is no transfer of asset, if only transfer of income. Scenario number 2, clubbing of income where income arising from revocable transfer of asset. Both the effect is same. Scenario number 1, you are not transferring the asset, only transferring the income, clubbed. Scenario number 2, you transfer the asset only for the sake of transferring it because you have put a clause that you can revoke that particular transfer in future. In that case also department will club that income in the hands of the original transferor. Now listen, there are certain exceptions in this particular point. So let's understand what all are the exceptions. This is important. So listen, what they are saying is exceptions where clubbing provisions are not attracted even in case of a revocable transfer. That is, this is an exception to that revocable transfer. In the following scenario, even though we can call it as a revocable transfer, there won't be any There won't be any income tax clubbing implication. So let's understand which all other scenario. Number 1, transfer not revocable during lifetime of beneficiary or transferee. Transfer not revocable during lifetime of beneficiary or transferee. Listen, if there is a transfer by way of a trust which is not revocable during the lifetime of beneficiary, and there are 2 points that you have to consider: not revocable during lifetime, and in case of any other transfer not revocable during the lifetime of the transferee, the income from transferred asset is not included in the total income of the transferor, provided the transferor derives no direct or indirect benefit from such income. So listen friends, there are 2 things that you have to focus. This is important. Say for example, I'll give you another example. Listen, say for example, you are my old friend. We were schoolmates. Assume that we were schoolmates. You are my old friend. So after retirement, I met you. After retirement, when I met you, you are in a pathetic situation. Assume that you are in a pathetic situation. So I told you that there is a house property in my name. So you do one thing. I'll transfer this house property in your name. I'll give this house property in your name. You can rent it out and you can take the income for your rest of the life. Once you are expired, you need to retransfer that particular property either to me or to my legal heirs. Because we have put an agreement in a way that during your lifetime, I will not take back that particular asset. During your lifetime, I will not take back that particular asset. Plus, I will not enjoy either directly or indirectly income from that particular asset. In such cases, income is not required to be clubbed. Say for example, this is also a revocable transfer, but I have given a promise that I will never revoke that particular power of attorney during your lifetime. Plus, I will not enjoy income from that transferred asset either directly or indirectly. Then also there is no clubbing requirement. Are you all with me? So 2 things. To the exception, there have to be 2 multiple conditions. Both are required to be satisfied. Number 1, you are not supposed to revoke that particular transfer during the lifetime of beneficiary. Plus, you are not supposed to take any direct or indirect benefit from that particular transferred asset. If both are satisfied, then there is no requirement of any clubbing provision. That's what the department say. It's an exception to the point. Now, moving on with the next scenario. These are wonderful scenarios. Clubbing of income arising to spouse. That is the 3rd scenario that we have to discuss. What do you mean by spouse? Say husband is transferring income to his wife's name, or wife is transferring her income to husband's name. In both scenarios, clubbing can be attracted. So different scenarios, that's what we are about to discuss right now. So let's understand which all are the different scenarios over there. Number 1, income by way of remuneration from a concern in which individual has substantial interest. So let's understand what exactly is this point number 1. So listen, remuneration in cash or to kind to spouse from a concern in which individual has substantial interest is to be clubbed. And they are also saying one thing, in computing total income of individual, all income which arises directly or indirectly to the spouse of individual by way of salary, commission, fees or any other form of remuneration, whether in cash or in kind, from a concern in which individual have substantial interest shall be included. So let's understand what exactly is this. Listen, say for example, I am Mr. JK. I am Mr. JK. I have substantial interest in a concern. I have substantial interest in a concern. In a concern. What do you mean by substantial interest? Substantial interest simply means a person having voting right in a particular company. That voting right should be at least 20% or more. Or we can say a person have 20% or more stake in a particular company. A person have 20% or more stake in a particular concern, maybe in a partnership firm, profit sharing ratio. Are you all with me? So substantial interest simply means a person having 20% or more interest or stake or share capital or profit, etc. So JK have 40% share capital in this particular concern or company. Then I can say that JK is a person having substantial interest in that particular concern. In such scenario, we can say JK is a person having substantial interest in that particular concern. Now friends, listen. The next point that you should consider is, say, this concern is giving remuneration. This concern is giving some remuneration to my wife. This concern is giving some remuneration to my wife. Then department say remuneration, wages, salary, whatever name it is, all those incomes have to be clubbed in my hands. All those income have to be clubbed in my hands. So listen friends, if a person having substantial interest in a concern and that concern is giving any remuneration or something to his spouse, then that entire remuneration have to be clubbed back in the hands of that particular person. That means JK. My wife is receiving remuneration from a concern where I have substantial interest. In such case, that remuneration have to be clubbed in the hands of myself. Now listen, say for example, say my wife is a chartered accountant or my wife is a cost accountant. That's why she is receiving a remuneration. She is working for that particular company and she is well qualified and skilled. That's why she is getting a remuneration. In such scenario, clubbing is not required. Are you with me? If my wife is qualified, then no clubbing provision. My wife should be qualified as well as she is doing something for that particular concern. Okay. My wife is qualified and she is doing nothing for that concern and she receives remuneration. Then definitely it will be clubbed. What department say? My wife should be qualified plus she should do some services for that particular concern. In such scenarios, clubbing is not required to be done. Are you all with me? Let's understand another scenario in relation to this husband and wife, friends. So department say, if both husband and wife has substantial interest in a concern, then what to be done? Say for example, this is a company, both husband and wife, both of them have substantial interest. Then what should be done? If both husband and wife have substantial interest in a company, then how the clubbing provisions are. So let's understand how the clubbing provisions are. Listen, where both husband and wife have substantial interest in a concern, both are in receipt of income by way of salary, etc. from the said concern, such income will be includable in the hands of that spouse whose total income, excluding such income, is higher. Listen, say both have substantial interest. Both have substantial interest and both are receiving what? Remuneration. Husband is receiving 1 lakh and wife is receiving another 1,50,000. Then how to be clubbed? Department say, without adding that 1 lakh and 1,50,000, you check which of the person have higher total income. Say husband's other income is 12 lakh. Other income. What is other income? Other than remuneration. OI means other income. Wife's other income is say 8 lakh. Wife's other income is say 8 lakh. Then what to be done? Before adding this remuneration, who has higher income? Husband. He has 12 lakhs. Yes or no? So the entire remuneration have to be clubbed in the hands of husband. That's what department say. If both are receiving the remuneration from a concern where both have substantial interest, then before adding that remuneration, who has higher income? That person's that income have to be clubbed in the hands of that particular person. Now listen, the both shouldn't be technically qualified. If both are technically qualified and both are doing services, that's why they are getting remuneration. No need of any clubbing. Are you with me? Both have substantial interest, both are qualified, and both are doing some services. That's why they are getting a remuneration. No need of any clubbing. For doing service, you should get remuneration. Alright, I'm talking about a simple scenario where you are getting remuneration for nothing. So, let's understand what to be done. Now listen, there can be another scenario. There can be one more scenario. In line with this, I'll tell you. Say for example, both have substantial interest. Both does not have any other income. Both have substantial interest. Both are not technically qualified. And both are in receipt of remuneration. Both does not have any other income as well. Then what to be done? Then department say no clubbing. Then technically we cannot club it. Because only those specified scenarios only we can apply the clubbing provision. If both are not technically qualified, both have remuneration, and both does not have any other income, then none of the clubbing provisions will be applicable. Because clubbing, if you want to apply clubbing, it have to be specifically provided under the clubbing provision. Are you all listening? Hope you got my point. So this clubbing is actually very simple. Clubbing is actually very simple. What your requirement is to understand the scenarios where clubbing provisions are attracted. That's it. That's it. Apart from that, there is nothing called clubbing. Only in those specified circumstances there can be clubbing. In all other scenarios, there is no requirement of any clubbing. That's what the department says. So let's move on, friends. Let's move on with the other scenarios. Listen. So asset transferred to spouse under section 64 subsection 1 clause number 4. So listen. Let's understand what is asset transfer to spouse. So in computing total income of an individual, income arising from assets transferred to spouse without adequate consideration, this is very important, without adequate consideration shall be included in the income of that individual. Say, listen, one fine morning, my wife, she has a property. My wife, she has a property. One fine morning, she have transferred her property in my name. It's an income generating property. Alright. One fine morning, she have transferred that income generating property in my name. It is not revocable and all. She transferred it forever. Alright. All the income from that particular property shall be clubbed in the hands of my wife. Why? Because department say, if you are transferring income into the hands of your spouse without adequate consideration, then all the income arise from that particular asset have to be clubbed in the hands of original transferor. Are you with me? Instead of this, say I'm paying money to my wife and I'm buying this house property or that particular property, then clubbing is not required to be done. It is not house property, okay? It is any asset, any income generating asset. Simply written property. Property doesn't mean house property. It means anything. Property means any asset, income generating asset. So listen. One fine morning, my wife or my wife, spouse means the partner, life partner. So, my wife transferred her income generating property into my name. Then, what should be the treatment? Department say, all the income from that particular property have to be clubbed in the hands of the original transferor. That means, in the example, in the hands of my wife. If the department also say one more thing, if it is for an adequate consideration, I purchase that particular property, then no clubbing provisions are attracted. This clubbing provisions are attracted when there is no adequate consideration. If there is adequate consideration, then there is no requirement of any clubbing provisions. I hope you guys are listening. Now, let's move on with this. So, in the following cases, clubbing provisions shall not be attracted on transfer of property to house. Where such transfer is for adequate consideration, where the transfer is under an agreement to live apart. What do you mean by where the transfer is under an agreement to live apart? What do you mean by agreement to live apart? Say for example, there is a kind of a legal divorce or something. Legal divorce, and my wife has given that particular house property to me. Alright. So it is just like giving, giving a compensation to the partner. So my wife has given that house property in my name. So that was the settlement for the divorce. In such scenario, there won't be any consideration from my side. There won't be any consideration, but still there is no requirement of any clubbing. Why department says is, if the transfer of a property, any asset, is under an agreement to leave apart, that means on account of a separation, then clubbing provisions are not attracted. Now, where asset transferred is a house property also, clubbing provisions are not attracted, because that simply means section 64 will not come. For house property, there is a separate section called section 27. It's called as a deemed ownership. In effect, clubbing is there, but it is not called as clubbing. If my wife is transferring her house property in my name, under section 27, my wife will be the deemed owner. And all the income from the house property will be assessed in the hands of the wife itself. It is not called technically as clubbing, but the effect is same. Hope you got my point. It is not, because it is not covered under 64, it is covered under 27. That's why they have written there is no clubbing as it is. Indirectly there is clubbing. How indirectly there is clubbing? Indirectly all the income from property will be assessed in the hands of my wife itself. Now, next point. Income from accretion of transferred asset is not required to be clubbed. What do you mean by accretion of transferred asset? So what department say? Income from accretion of transferred asset is not required to be clubbed. Let's understand what is this accretion of transferred asset. Listen. Say for example, listen. I have transferred debentures. That means 10 lakh debentures where interest rate is 10% in the name of my wife. Without any consideration. Are you with me? Every year my wife will get 1 lakh rupees as interest. This 1 lakh rupees have to be clubbed in my hands. Because it is an income from transferred asset without consideration. What was the asset here? Debentures of value 10 lakhs, interest 10%. So every year I'll get 1 lakh. That is the income from the transferred asset without any adequate consideration. So that 1 lakh have to be clubbed in the hands of JK. Are you all with me? But that 1 lakh is with my wife. Clubbing does not mean that my wife have to repay that 1 lakh in my hands. The amount will be with my wife, but the taxability will be with me. Are you with me? That 1 lakh rupees is still with my wife. But that 1 lakh will have to form part of total income of my return. That's the point. Now listen. So my wife has 11 lakh rupees right now. Yes or no? She sold that particular debenture and she got 10 lakh itself. And she made use of this 1 lakh. And she invested in, say, bonds. She invested in what? Bonds. So how much is the investment in bonds? 11 lakh right now. Because she sold that particular debenture and she had that 1 lakh rupees. She invested in what? Bonds. And the amount is 11 lakh. So the bonds interest is at 10%. For the bond also interest is at 10%. Then you have to split this interest into two. On 10 lakh 10% and 1 lakh 10%. This 1 lakh 10% is not required to be clubbed in the hands of JK. 1 lakh 10% means 10,000. This 10 lakh 10%, that is 1 lakh, have to be clubbed in the hands of JK. Why? Because this 1 lakh is accreted income. What is accreted income? I have transferred an asset in the name of my wife. From that asset, you have an income. That income is clubbed in my hands. That income's income is not required to be clubbed in my hands. Say for example, instead of complicating this much, if I say that my wife reinvested this 1 lakh in debentures again, my wife reinvested that interest of 1 lakh in debentures again, she will get interest for that 1 lakh investment next year. That is not required to be clubbed. Are you with me? Income from an asset is required to be clubbed. Income's income is not required to be clubbed. Income from an asset is required to be clubbed. From that asset, you are generating some income, that is required to be clubbed. From that income on its reinvestment, if you are getting another income, that is not required to be clubbed. Only the transferred assets direct income is required to be clubbed. I hope you guys are with me. Rather than by hearting it, understand the concept. Understand the concept, because in exam they will ask you questions left and right. Left and right, they will bring up with adjustments, other things, they will complicate it like anything. If you know the concept, that's it. So what department says, accretion of transferred asset is not to be clubbed in the hands of income of the transferor. Accretion means income's income. All right, now let's moving on. Now listen friends, I've told you that adequate consideration should be there. Are you with me? If JK is purchasing property from his wife by paying adequate consideration, then there won't be any clubbing provision. What is this adequate consideration? Can you call love and affection as adequate consideration? My wife says, I'm loving her like anything. That's why she transferred her property in my name. Can you call that love and affection as a consideration? No. Love and affection and all is not regarded as a adequate consideration. Consideration means it should be in some monetary terms. So it is also to be noted that natural love and affection do not constitute adequate consideration. Don't come and say that love is there, that is the valuable thing. Out of that love, that is my consideration. You cannot quantify that. So don't come and say that love and affection is adequate consideration. It is never regarded as adequate consideration. I hope you guys are with me. Now, moving on to the next scenario of clubbing, that is transferred asset invested in business. So let's understand what to do with this transferred asset invested in business. So where asset transferred directly or indirectly by an individual to his spouse are invested by the transferee in the business, then proportionate income arising from such investment is to be included in the total income of the transferor. So listen, what they are saying is, where asset transferred directly or indirectly by an individual to a spouse are invested by the transferee in the business, then proportionate income arising from such investment is to be included in the total income of the transferor. So what do you mean by this? Say, if the investment in nature of contribution of capital, proportionate interest on capital will be clubbed in the hands of income of the transferor. And there is one more thing, such proportion has to be computed by taking into account value of aforesaid investment as on the first day of the previous year to the total investment in the business by way of capital contribution in the firm as a partner, as the case may be, by the transferee as on that day. It looks very complicated, but it is very simple. So I'll give you one example. It is highly conceptual. All right, I'll give you one example. Say for example, JK, I transferred 10 lakh rupees bonds in the name of my wife. Are you with me? My wife has a business. My wife is an entrepreneur and she was running a business. She started her business in 1st April 2021. 1st April 2021, she started a business with a capital of 20 lakhs. I transferred this particular 10 lakh bonds, say on 15th July 2021. On that day itself, she invested that bond in her business. She converted that bond into money and she invested it in her business. So 10 lakh investment. She invested 10 lakh on which date? On 15/7/2021, she invested 10 lakh. I hope this much is clear. Now, she has done business in that year and her profit for the year. Profit for the year 2021-22 is say, profit for the year is say 1 lakh rupees. Profit for that particular year was 1 lakh rupees. Now listen, this is the scenario where the husband have transferred a asset in the name of wife and she invested that in her business. All right, then income is indirectly invested in the business. That asset is directly invested in the business, not indirectly, directly invested in the business. Now the income from the asset is profit from the business. Income from the asset here is profit from business because she converted that bond into an investment, into capital, and she invested in that particular business. Now that asset's form is changed. Yes or no? The asset was bond initially. She converted it into money and she invested it in the business and she got a profit. Then this profit also have to be clubbed in the hands of husband. Yes or no? This profit, because this 1 lakh profit she got due to her capital. So this profit also have to be clubbed in the portion of profit also have to be clubbed in the hands of husband. It is just like direct income from the transferred asset. So what department says is, For that, you need to check one thing. While taking the proportionate profit, such proportion has to be computed by taking into account the value of aforesaid investment as on the first day of the previous year to the total investment in the business or by way of capital contribution in a firm as a partner, as the case may be, by the transferee on that day. So what department say is, while computing that proportionate profit, the first thing that you need to check is whether that transferred asset comes as a part of the opening capital of that business. Whether the transferred asset comes as a part of the opening capital of that particular business for that year. You tell me, the transferred asset, the asset was transferred on 15th July 2021. Opening capital, she started her business on 1st April 2021. So this 10 lakh is not forming part of what? Opening capital. Are you with me? She started her business on 1st April 2021 with 20 lakhs capital. Only after that she got that particular asset. Yes or no? And hence we can say that that transferred asset is not forming part of the opening capital of the business. Hence this year no clubbing required. This year no clubbing required. Now moving on to the next year. Say 2022-23. How much will be the opening capital? You tell me. In 2022-23 on 1st April 2023, how much will be the opening capital? 31 lakh. Because that 1 lakh profit is there. It have to be treated as capital again. Otherwise, you have to withdraw that profit. Yes or no? So, in the next year, the profit will be 31 lakhs. How it become 31? 20 lakhs opening, 10 lakhs in between transfer, 1 lakh your profit. Everything added together, she reinvested everything. And her capital is 31 lakh. And she got a profit of, in that year, she got a profit of 11 lakh. Not 11 lakh, say she got a profit of 1 lakh. Again, not 1 lakh, we'll take another figure. She got a profit of say 3 lakh. She got a profit of how much? 3 lakh. Now again, this profit you have to check whether it has an opening, in the opening capital, whether there's an impact of gift coming. Yes. Out of your opening capital, 10 lakhs is the gift given by the husband. So this 3 lakh profit have to be, a proportionate profit have to be clubbed in the hands of husband. How do you find out that proportion? Very simple. You take the total profit, that is 3 lakh. How much is your total capital? 31 lakh. How much is the transferred asset? 10 lakh. So how much is the figure coming? Just help me with the calculation. 96,774. This have to be clubbed in the hands of JK. How much is the remaining profit? So out of 3 lakh, you have transferred 96,774. And how much is the remaining profit? 2 lakh 3,000 to 226. 226 have to be taxed in the hands of wife itself. That's her profit. Only those proportionate profit due to the transferred asset which forms part of the opening capital of the business have to be clubbed. The rest, there is no requirement of any clubbing. I hope this much is clear. So friends, please take your question sheet, page number 31, question number 2. Listen friends, so I'll read the question from here. Let's understand how the clubbing provisions are attracted here. So Mr. Vaibhav started a proprietary business on 1/4/21. He started with an opening capital of 5 lakhs. Now he incurred a loss of 2 lakh during 21-22. So there was a loss in the year 21-22. It was a loss. And how much was the loss? 2 lakh. Now, during 21-22, to overcome the financial position, his wife, Mrs. Vaishali, a software engineer, gave a gift of 5 lakh on 1/4/2022. So, listen, his wife gifted him an amount of 5 lakh rupees. On which date? On 1st April 2022. 1st April 2022. So, that 5 lakh forms part of the opening capital. Why? Because on the first day itself, she has given that particular gift. Are you with me? Now, what to do is, how much is her opening capital? How much is the opening capital of that particular business? 5 lakh was the last year's opening capital. He has incurred a loss of 2 lakh. That means 3 lakh is the net capital. This year, first day itself, they got a 5 lakh rupees as addition. That means 8 lakhs. First day, 8 lakhs, she started her business with 8 lakhs in that particular year. Yes or no? Now, which was immediately invested in the business by Vaibhav, and he earned a profit of 4 lakh. So that profit he earned is 4 lakh in that year for 22-23. Now compute the amount to be clubbed in the hands of Mrs. Vaishali for assessment year 23-24. If Mrs. Vaishali gave the said amount as loan, what would be the amount to be clubbed? So there is a sub question also. So the first point, how much is the total profit clubbed in the hands of Vaishali? Vaishali is his wife. So very simple, you take the total profit of 4 lakh, then divided by the total opening capital, that is 8 lakh. Out of that, how much is the gift received from wife? 5 lakh. So how much will be the proportionate profit, friends? 2 lakh 50,000 is the proportionate profit to be clubbed in the hands of his wife. That is the final answer to the question. Now they are also asking one more thing. What if it is a loan given by his wife? Is it required to be clubbed if it is a loan? The answer is no. If it is a loan with a proper interest and Mr. Vaibhav is paying proper interest to his wife, then there is no requirement of any clubbing. That interest income will be taxed in the hands of wife. That's it. There is no clubbing as it is. If it is a proper loan, then and the repayment is there, interest payment is there, then absolutely no problem. We are only talking about simple transfer of money or simple transfer of assets. Are you all with me? I hope it is clear. Alright friends, so let's continue with the other points in clubbing. We have a few more points in clubbing. So listen, so let's understand what exactly is the next point in clubbing. So what they are saying is transfer of assets for the benefit of spouse. So transfer of asset for the benefit of spouse also is required to be clubbed. Listen, in case an asset is transferred to any other person or an AOP otherwise than for adequate consideration for immediate or deferred benefit of spouse, then income on asset so transferred shall be clubbed in the hands of transferor to the extent income from such asset for the immediate benefit or deferred benefit of his or her spouse. What do you mean by that? Say for example, Mr. JK is there and I have an income generating asset. Income generating asset. If I transfer this asset directly to my wife, then you tell me what will happen. If I transfer this particular asset directly to my wife, then definitely clubbing provisions will get attracted. Yes or no? Instead of that, I have told my friend, there was one of my close friend was there. I told my friend that I'll transfer this asset in your name forever. I've transferred this asset in your name forever, but you have to do one favor for me. What is that? You have to make use of the income from the asset for my wife's benefit. That income from asset have to be utilized for wife's benefit. What do you mean by wife's benefit? Mr. Friend will be the owner of the asset. Mr. Friend will be the owner of the asset, no doubt. But friend is not supposed to take any money from the asset. All the income generated from the asset have to be deposited in the name of wife or have to be utilized in the name of wife, either in the year in which income is accrued or in the later years. Alright, in that case also, all the income have to be clubbed in the hands of JK. Why? Instead of directly transferring that asset in your wife's name, you have done a crooked way. You have done what? You have find out a third person and you transferred the asset in his name forever. And you told him that utilize that particular money for the benefit of wife. So indirectly we know that it is just like a transfer to wife. So you do one thing, all the income from that asset have to be clubbed in the hands of that particular original transferor. Are you all listening? So the point is very simple. If a person is transferring an asset to a third person or to any other trust for the benefit of spouse, then all the income have to be assessed or clubbed in the hands of the original transferor. So these are the points. I hope this much is clear. Now, so these are the points that you have to focus in what? Clubbing when there is a transfer of asset to spouse. Now we have two more main points. Number one, next point. Clubbing of income arising to son's wife. Clubbing of income arising to son's wife. What do you mean by son's wife? Yes. So, son's wife means your son's wife. That's it. You are being the father-in-law and the other is daughter-in-law. So, the point is if the father-in-law transfers or mother-in-law transfers any asset to daughter mother-in-law, then what will happen? Income arising to son's wife from assets transferred without adequate consideration by father-in-law or mother-in-law. So what department says is, when the father-in-law or mother-in-law directly or indirectly transfers any asset without adequate consideration in the name of daughter-in-law, then what will happen? Income from that particular asset will be clubbed in the hands of father-in-law or mother-in-law. So listen friends. So father-in-law, FIL means father-in-law. Okay. MIL means mother-in-law. So father-in-law or mother-in-law transfers any asset, any income generating asset. Okay. When I say asset now, it is always income generating asset to daughter-in-law. Alright. Then the entire income from that asset have to be clubbed in the hands of father-in-law or mother-in-law. That's what the department say. What if there is a transfer to son-in-law? Son-in-law. Daughter-in-law means a part of your family. Son-in-law means it is not your family basically. Yes or no? So if you transfer something to son-in-law, there is no clubbing. Department knows that income and son-in-law will never come back. That department know. And hence, department say, son-in-law you can transfer. You can transfer. We know that. For evading taxes, don't do that foolishness. If you transfer, gone forever. But daughter-in-law is your son's wife. So she's there in the family. So if you transfer, that will be clubbed in the hands of yourself. That's what they say. Now listen. The same transferred asset invested in business. If the daughter-in-law, listen, these are very simple repetition of the past points. If the daughter-in-law invests that money in business, then the profit have to be proportionated based on the opening capital. If that daughter-in-law invested that particular asset in business, then profit from the business have to be apportionated based on the opening capital, and it will be assessed in the hands of father-in-law or mother-in-law. Moving on. Next is transfer of asset for the benefit of son's wife. What is that? Instead of directly transferring an asset in the name of daughter-in-law, what the father-in-law did is, he find out a third person and transferred that asset in the name of third person. And he told the third person that to use that particular income for the benefit of daughter-in-law. In that scenario also, clubbing provisions will get attracted. Just like that spouse case. All these three cases are covered under spouse also. Yes or no? So, three cases are here. Listen, very simple. Three scenarios. Father-in-law or mother-in-law directly transfers an asset in the name of daughter-in-law. All the income will be clubbed in the hands of the original transferor. Scenario 2. If the daughter-in-law invests that particular asset or invest that particular money for her business, then what to do? You compute the profit from the business, and based on the opening capital proportion, you apportion it in the name of father-in-law or mother-in-law. Then third scenario, if father-in-law or mother-in-law transferring an asset to a third party for the benefit of daughter-in-law, then also proportionate income have to be clubbed in the hands of father-in-law or mother-in-law. I hope this much is clear. Done. We have only one more clubbing scenario, that is clubbing of minus income. This is also important. When I write this important, that doesn't mean you can skip others, okay? You have to study entire clubbing chapter, because short in examination, you must study clubbing. Small chapter, easy chapter, short in exam. It's very easy to crack marks from clubbing. Solve that entire practice workbook. All variety questions you can see. Solve different questions, working note, answers, everything is given. Author's opinion, everything is given. So try to solve everything in the practice workbook. Not from clubbing, everything. Now, let's start with this. Very simple. Say for example, you have a minor child. You have minor child or minor children. All the income of that minor have to be clubbed in the hands of parents. Which parent? Two parents are there, father and mother. In hands of which parent? Father or mother? The parent who has more income before clubbing the minus income. So, out of which either father or mother who has higher income before clubbing this minus income, in that person's hands, you have to club the minus income. Now, all the minus income have to be clubbed in the hands of the parent having higher income. Now, listen. Say that minor earned an income due to his skill. Say for example, child artist, child singers, or out of reality show or something, a minor is earned an income due to that minor's skill or qualification or experience, etc., then clubbing provisions are not attracted. Except that all other income of minor have to be clubbed in the hands of the parent having higher income. Are you all listening? If the minor earned that particular income by applying that minor's skill, experience, expertise, etc., no requirement of any clubbing. Otherwise, that income have to be clubbed in the hands of the higher income earning parent. One more thing. Say for example, I have a son. Are you all listening? I have a son. Say he's a child actor. He's a child actor. He acted in the movie and my son's remuneration is say around 30 lakhs. Around 30 lakhs. Is that 30 lakh required to be clubbed? Is that 30 lakhs required to be clubbed? Answer is no. Why? Because my son acted in the movie, that's why he got an income. But that 30 lakhs is not required to be clubbed. Then son deposited that 30 lakhs in FD, in bank FD. He got a 10% interest, that is 3 lakh. He got what? 10% interest. Now my question is that 3 lakhs required to be clubbed? The answer is yes. Except those incomes which are earned out of applying his skill, experience, talent, etc. Whatever income that he earned have to be clubbed in the hands of parent, higher earning parent. Are you all with me? That 30 lakhs is not required to be clubbed. Why? Because he applied his skill. But when he invested it in a bank and is getting an interest from the bank, that interest have to be clubbed in the hands of higher income earning parent, because that interest, for earning that interest, there doesn't require any skill, experience, expertise, etc. It's a passive income. So that have to be clubbed in the hands of the higher income earning parent. I hope you guys are with me. So we were talking about the clubbing provisions of minor's income. So let's continue. There are a few points that we should focus. Now listen, moving on to the next concept, it says, listen, so say my minor child is suffering from disability. Say I have a minor child or a person have a minor child and that minor child is suffering from some disability. If your minor child is a disabled one, then clubbing provisions are not attracted. All the income generated by a minor child who is suffering from disability, income is not required to be clubbed. For a normal minor child, income is required to be clubbed. If your minor child is suffering from any disability, then income is not required to be clubbed. Now there is one more advantage. So say for example, I have a normal minor child and his income is required to be clubbed in my hands. When that income is clubbed in my hands, I can claim an exemption that is under section 1032. Department say up to 1,500 rupees per child. I can claim an exemption. So when income of a minor child is clubbed in the hands of parent, that parent can claim an exemption of 1,500 up to 1,500. Minus income is only 1,000, then the exemption is 1,000. Minus child income is 2,000, then exemption is 1,500. Up to 1,500 you can claim as an exemption per child. What is per child? I have 3 childs. 3 of them have income. Then 1,500 into 3. 4,500. So 1,500 per child, there is no limit. There is no limit and all. The section is section 1032. I hope it is also clear. Now listen. Say the marriage of the persons, say there was a divorce between the parents. The minor's parents got divorced. Then the minor income have to be clubbed in the hands of the caretaker parent. What do you mean by caretaker parent? The parent who takes care of the affairs of the minor. In that parent's hands, that income have to be clubbed. That's what the department say. If the marriage of parents are not subsisting, then income have to be clubbed in the hands of those parents. Those income are actually assessed. That's what the department say. I hope this much is clear. Even if your daughter is a minor married daughter, income have to be clubbed. Don't ask me whether minor can be married in India. That is irrelevant for income tax department. Whether you are, whether you are a minor or not, whether you are married or not, doesn't matter. If you have income and you are minor, that income will be clubbed in the hands of your parents. We don't care about the other laws. Alright, we have our own style. Minor marriage may be illegal in India. That's not our problem. Our problem is you are minor and you have income. It is not due to your skill. Club it. That's it. Are you with me? So friends, we were discussing about the clubbing provisions and we have one more concept here that is called as cross transfers. Fantastic it is. It is not a section. That's why there is no section number. It's actually an old case law. It's an old case law. So let me explain what exactly is this cross transfer because it is tested in exam. It's actually an old case law but tested in exam. So let's understand what exactly is this cross transfer. Listen, first I'll read out the theory, then I'll show you one example. Thereafter, this concept will be thorough. In case of cross transfers also, the income from assets transferred would be assessed in the hands of deemed transferor if transfers are so intimately connected as to form part of a single transaction and each transfer constitute consideration for other by being mutual or otherwise. That is, two transactions are interconnected and are part of the same transaction in such a way that it can be said that circuitous method was adopted to evade tax. The implication of clubbing provisions would be attracted. I'll give you one example to understand this concept. Listen, say for example, say Mr. A and Mrs. A, Mr. B and Mrs. B. Listen, if Mr. A transfers any asset to Mrs. A, then all the income from that asset will get clubbed in the hands of Mr. A. That's what we have learned. Yes or no? If Mr. B has transferred any asset to Mrs. B, then all the income of Mrs. B will get clubbed in the hands of Mr. B. Because without adequate consideration, clubbing provisions will get attracted. So A and B were friends. A and B were friends and they decided to do one thing. Mr. A will transfer an asset in the name of Mrs. B. Mr. A will transfer an asset in the name of Mrs. B and that asset is 10 lakhs debentures. 10 lakhs debentures, 10% interest. Alright? You tell me whether there is any clubbing provisions attracted. No, it is just like a gift given. It is just like a gift given, not revocable and all. It's a gift given. Clubbing provisions are not attracted. Likewise, Mr. B transferred an asset in the name of Mrs. A. Say bonds having a value of 10 lakh, 10% interest. So instead of directly transferring Mr. A to Mrs. B, Mr. A agreed to transfer an asset, same income generating capacity to Mrs. B. Mr. B also agreed to transfer a like asset in the name of Mrs. A. This is called as cross transfers. If such transactions happens, all the income generated by Mrs. A will be clubbed in the hands of Mr. A. And the income generated by Mrs. B will be clubbed in the hands of Mr. P. This is an anti-avoidance measures and this is called as what? Cross transfer. Are you with me? This concept is called as what, friends? Cross transfer. Now listen. Now let me make a small modification to this example. Let me make a small modification to this example. Say for example, this Mr. B's gift to Mrs. A was 10 lakh having 10% interest bond. Yes or no? Yes or no? Say instead of that, say it is 9% bonds. Instead of that, it is 9% bonds. Now you tell me, how much is the income received by Mrs. A? How much is the income received by Mrs. A? 90,000 rupees. Yes or no? How much is the income received by Mrs. B? How much is the income received by Mrs. B? 1 lakh rupees. So this is not matching amount. In the last example which I have told you was matching, exactly 1-1. Here it is 91. So how the clubbing provisions will come? Only 90,000 will be clubbed in the hands of Mr. A and Mr. B. Only 90,000 will be clubbed in the hands of Mr. A and Mr. B. Only the matching amount have to be clubbed. The rest of the amount department is not saying anything. Are you with me? When there is a cross transfer, only the matching amount will get clubbed. The other income, it's not department's piece of cake. Department is least bothered about the other income. Department will only say, only the matching income will get clubbed. That's it. Are you all listening? Hope you got the concept. It has been tested in exam. So friends, by that we can say our clubbing provisions are actually over. We don't have anything more in clubbing to discuss because we have covered all the concepts. I hope you got all the concepts.
To purchase recorded lectures and textbooks, visit our website www.cajosekurian.com.